Are you thinking about moving from an employer plan to Medicare right now? Not sure if the timing is right? You may be surprised that some of the decisions you need to make are based on the amount of employees your employer has. Hi, I'm Lisa Martin, your health insurance Sherpa, guiding your health insurance journey with clarity, confidence, and the right information. So today we are joined again by Mike Markham, also known as Medicare Mike,
I like that.
to help us understand why the size of your employer and a few other details will impact your decision and your timing for Medicare. So welcome, Mike. It's really good to have you back on Health Insurance Sherpa.
Thank you, Lisa. I appreciate you having me back. Yeah, it's good to be back.
So in case someone is listening and maybe just starting their Medicare journey, would you just fill us in on just a couple highlights on Medicare, the enrollment period, and what else they need to be aware of
Sure.
initially?
So last time we kind of talked about the what is Medicare. This is more focused on the when do I move to Medicare. So generally speaking, the easiest time to move to Medicare is during the initial enrollment period. So that's when somebody is first turning 65. There's a 7-month window to sign up for Medicare. You can start that process 3 months prior to your 65th birth month. It includes the month you turn 65 and then continues for 3 months after your 65th birth month. So that's somebody's initial enrollment period to sign up for Medicare for the first time.
But they really should start the process 6 months ahead.
They should. You should start the planning process. Okay. You can start the official enrollment process 3 months prior, but you really should start the planning process and having that conversation at a minimum of 6 months. 6 months is usually a good starting point. That way, by the time you get to the initial enrollment period, you kind of have a plan in place for what you're going to do or what decisions you're going to make at that time. So it's not not a surprise when you get there.
Right. And figuring out who you're going to work with.
Exactly. Okay. Exactly. So that's the initial enrollment period. That's when somebody ages into Medicare and can take it for the first time. It's not always the only time. So if somebody does have group insurance in certain situations and they plan to work past age 65, they do have the option to defer their Medicare enrollment to a later date. And it's not a one-size-fits-all answer for everybody. Everybody's situation is different. So we kind of have to plan accordingly for each individual situation to see, does it make sense to move to Medicare at 65, even if they are going to continue to work, right, or should they defer Medicare and stay on the group plan for whatever reason that might be. So it's an important decision and conversation to have. Early, exactly. Right. Okay. So,
well, you've mentioned a few times that it's really important for people that are working for an employer that have less than 20 employees. Why is that so critical for them?
That's a great question. So oftentimes when somebody is on a group plan and they may hear somebody say, oh, well, you have group insurance, you don't need to enroll in Medicare. And while that's often true, it depends on the size of the employer. So Medicare kind of breaks it into two categories. They have small group health plans, which are 20 or under employees, or over 20 employees, which are considered large group health plans.
And a lot of Phoenix market is under 20 employees.
Sure. If you have a small business owner that has maybe 4 or 5 employees or is a small group, in those cases, for those individuals that are turning 65, it's a coordination of coverage question. So in that situation, if it's 20 employees or under, Medicare is put in the primary position and the group insurance assumes the secondary position. So in that scenario, somebody in a group under 20 employees, although they have group insurance, although that's still going to be an option if they continue to work past age 65, they need to enroll in Medicare, at least Medicare Part A and Part B, because Medicare is going to assume that primary position and the group insurance is going to be pushed to secondary. So a situation that can happen if somebody doesn't enroll in Medicare at 60 or when they're eligible in a small group health plan is the group insurance may not pay on claims. So if somebody doesn't enroll in Medicare, that should be in the primary position. The group insurance is going to be secondary, and the group plan may say, wait a minute, why are we paying on this claim when Medicare should be paying primary? So
it sounds like it get complicated and
it can.
Interrupt your claims.
It can. It can lead to denied claims, and it's not just like a snap of the fingers and then we can get Medicare. It's oftentimes a 1 to 2 month process, or possibly longer, to get get Medicare in place, and if somebody has medical claims that they're trying to get coordinated, that's much easier to do proactively versus reactively that way. So, yeah.
Okay. Okay. So what other factors factor into that? The benefits, network, what else should they be considering?
Sure. So, as specifically looking at groups under 20 employees, you have to move to Medicare or with a small group plan. For those that are in a group plan that's over 20 employees, those plans are considered creditable with Medicare. So you can defer your Medicare enrollment. You can stay on a group insurance plan, but it doesn't always make sense to do so. Oftentimes Medicare is going to be a much better position on the benefit side if you pair that with a Medicare supplement plan and you greatly reduce your deductible, or if you reduce your premium, or if with original Medicare and a Medicare supplement, you eliminate networks. You can see any provider nationwide as long as they accept original Medicare.
That'll be great news for some of my ACA clients.
Sure. Right.
Nationwide PPO.
Right. Or those that are stuck in a restrict HMO or something like that.
Get access to Mayo again.
Right. Exactly right. So, different story with the Medicare Advantage plan, but if we're talking about a Medicare supplement with original Medicare, it just kind of opens opportunities for you that the group insurance would not. So,
better coverage, better network. It's definitely something to consider for anybody.
Sure. Some reasons why somebody would stay on a group health plan and defer Medicare. The biggest reason that I see when I'm working with clients is if they have a dependent or they have a spouse that is not yet Medicare age. Okay. So let's say the individual turning 65, who is the one working and has the group insurance, they have a spouse who is age 60, who's not eligible for Medicare for another 5 years. If they're going to continue to work for that 5 years, they can stay on the company group health plan and wait until their spouse ages into Medicare. So
that's really for the people with the larger employers.
It is
20 or more.
Yeah, under 20.
It's not an issue.
Under 20, you it's basically a necessity. You have to enroll in Medicare. Otherwise, it's going to cause claims issues with the group health plan going forward. So, and often one kind of side note to that, Lisa, is if your employer group is close to that line, if there may be 22 employees one year, and then next year they have 19 employees, it's not a set in stone situation. So if the employer group, size changes, that changes who's primary and who's secondary, and can have some very serious impacts on your medical coverage that way.
That's a really, really important point.
Sure.
Or maybe they have 22, but that they might be slowing down for some reason.
Right.
Something to be aware of.
Yeah.
Okay. Really good point.
Yeah. So, some other questions to kind of consider with whether you would want to move to Medicare or stay on a company group plan if you're in a group that's over 20 employees would be premium. So we would compare what your all-in Medicare premium would be versus what your group premium is. Right. If the employer is covering a large portion of your premium or covering all of it, that may be a reason to defer your Medicare until you plan on coming off of it at a later date for you and a spouse, depending on the situation. Whether or not you have an HSA is another consideration that you would kind of want to take a look at, because if you put any piece of Medicare in place with an HSA, we won't get into all the rules and regulations of that, but just the simple way to understand it is if you have any piece of Medicare active, you can have an HSA, but you can't contribute to an HSA. There's tax complications with that. And
you can keep it past 65.
You can
contributing, but you can let it sit there for 10 years. Just use it as you need to.
Correct. Okay. Correct. So
or your younger spouse may still be able to contribute if they're in an HSA.
Exactly. Okay. Yeah. So it's just you can't actively contribute when you have any part of Medicare active, because typically if somebody is going to defer their Medicare enrollment past age 65 because they're on an employer group health plan, if they're contributing to an HSA or if they have an HSA, oftentimes they will, it's advisable to enroll in Part A only. If you're going to go on a group plan, enroll in Part A only because there's no premium for it. There is a premium for Part B, so we would defer the Part B portion, but you would enroll in Part A. However, if you have an HSA that you or the employer are contributing to, you don't want to put any part of Medicare in place, A or B, because that can cause a complication with the HSA and the tax penalties that way for having Medicare active and contributing to an HSA. So those little variables that all of those little pieces are questions to ask regardless of whatever direction you go. If you
whatever your situation
if you move to Medicare, those are questions to ask. If you're going to stay on the company group health plan, those are questions to ask, because you want to have those kind of puzzle pieces put together prior to that decision being made. So so those are the various things. Deductibles as well. We would look at if you're in a high deductible plan that if moving to Medicare, if you would go from a $6,000 deductible to a $283 deductible.
I still cannot believe it's so low on Medicare.
Right. Yeah.
Everybody should be lining up to sign up for
I
that.
am chomping at the bit for the day that I am able to have a $283 deductible.
And that by deductible, he means out of pocket.
Exactly.
So that doesn't even really exist in my world.
Right. No, and that's the thing, Lisa, when we compare premiums, Medicare is not always the cheapest option if we compare that to group insurance, but almost every situation, the benefits are going to be significantly better depending on how Medicare is structured. If it's original Medicare paired with a Medicare supplement plan, 10 times out of 10, the benefits are going to be better on Medicare than they are on a group health plan. Advantage plans are different. That's kind of it's a whole nother world, whole nother conversation. But the benefits are always going to be a step up. Premium is the equalizer there. So if your premiums are going to be significantly more on Medicare versus a group health plan, it's a consideration. That's something that.
Roughly, what's the income limit where people start seeing a rate up on their Medicare premium?
Great question. So Part A does not have a premium as long as you or a spouse have paid in 40 quarters into Social Security.
Which is 10 years?
10 years, yeah. Part B has a standard premium this year of $202.90. So $203 a month is the standard premium for Part B. However, that is means tested. So if you're a high income earner, if your income is above a certain threshold, then they can charge more. It's called an IRMAA, which is an income adjustment or income related monthly adjustment amount. The way that they calculate that, it's basically a tax or a surcharge on your income. So what they do is, so for 2026, if you were enrolling in Medicare in 2026 for Part B specifically, and the prescription drugs have an IRMAA as well, they follow the same income guidelines, but for 2026, they would look at your 2024 modified adjusted gross income.
So they look at your tax return.
They do. They do. And it's a 2-year lag. So for 2026, they would look at 2024. If you had a qualifying event like a work stoppage or a work reduction or certain situations, you can eliminate that 2-year catch-up period, and it would be based off of your current year estimated income. But you have to have one of those qualifying events to be able to appeal the income adjustment, which eliminates that 2-year catch up. But the income levels, if you're a single filer, your income in 2024, if it's at or under 109,000, you pay the standard premium of $203 a month for Part B.
What about a couple?
If you're a joint filer, then it's $218,000
so easy to calculate.
Yeah. If you're above that threshold, then you have an IRMAA. You have an income adjustment on your Medicare Part B premium, and it can be pretty significant. That first jump, it may add, $80 a month to your premium, but if you're in a much higher income bracket, it can, I believe the highest tier can take your $203 premium up to $680 or $690 a month.
And that's just for Part A.
For Part B.
Oh, for Part B.
Yeah.
Okay.
Yeah. And that's per individual. So if it's you and a spouse moving, they look at income together, right? And so you both are hit with that IRMAA amount. It's not just the one, if only one spouse is working and the other is not, that IRMAA is based off of your total combined income, and you both are assessed that income adjustment.
So you need to start planning at age 63, really.
You can, yeah.
Yeah,
I mean, I'd say
especially for higher
I
income
would,
earners.
for if, knowing that Medicare train is coming and you're going to have to make a decision one way or the other, if you have a financial advisor or a CPA,
Yeah.
because of that 2-year look back period at 63 is a great point, Lisa, that, involving your team and having that conversation with a CPA or a financial advisor or your insurance advisor and saying, hey, this is my income this year, that's going to impact my Medicare premium when I'm eligible at age
Yeah.
65. And how do we try to structure this or avoid this? And
It's part of
that
your retirement planning, essentially.
it is,
It
it
really can
is.
take you down different paths.
Sure. And that, and involving, or at least, and if you're financial advisor or CPA, most of them, should be aware somewhat of the IRMAA levels, but that's not their lane. That's not their job, right?
Well, that's why you get
Essentially.
involved in you will talk with the other
Sure.
advisors too. You can have a team meeting. I do that
Sure.
all the time.
Yeah, because especially we see it all the time on the financial advising side. Like if somebody's talking about a Roth conversion,
Yes, that's coming up a lot.
yeah, right. And because that IRMAA amount is assessed every single year. So for 2027, it's going to be based off of your 2025 modified adjusted gross income, 2028, 2026 income, and so forth down the line. And if you, in 1 year, if you have a Roth conversion, or if you sell a piece of real estate and have capital gains, or whatever the case might be, it can, in that specific year, it's not going to be long term,
Right.
but in that specific year, it can drastically impact your Medicare premiums. And on top of, if you're a higher income earner, it's just going to, compound the problem even further. So,
Wow.
so it's not a one size fits all. Not everybody pays the same thing. It's the same. Part B is the same for everybody. There is no, if you're paying more, Medicare's not better than the standard premium. But the premium can vary drastically depending on those variables, and it's important to kind of plan for that.
Right.
And I think, we think about that at age 65, but that's a great point, Lisa. I think at age 63, when there's that 2-year catch-up period, is a great time to start having that conversation. Yeah. Yeah.
And I'm sure if you're working with an advisor, that's going to come up. Or
Yeah.
maybe they're thinking about it already, but
Yeah.
maybe not. So
Yeah.
it's good to be informed.
Yeah.
That's really important.
Yeah.
Okay. So how about maybe hit just some key points somebody can take away? What are the questions they want to discuss, the highlights?
Sure. So when you're planning on possibly working past age 65 and you're in a plan that would be deemed creditable with Medicare, over 20 employee group,
Yeah.
and you want to stick with it, you want to stay with the group insurance,
Like
or
your
you
spouse insured or
exactly,
something like that.
yeah, or you want to move to Medicare, regardless of what decision you make, the key questions to ask would be, what are my premium differences? This is what I'm paying for the group insurance for myself and my spouse. What would Medicare look like from a premium standpoint? Because that's kind of the starting point. From there, we would then kind of look at the benefit differences. So comparing what original Medicare and a Medicare supplement plan would look like from a deductible
Total cost for the year.
Exactly. Yeah. They're their max out of pocket, if you will, for the year, with deductibles and then the group insurance, if it has a high deductible, and then if it has a high max out of pocket or a family deductible.
Most of my groups are, $8,000 to $10,000. So that's a huge difference.
It is. It is.
They may be getting the employer to pay the premium, and they appreciate that.
Right.
But I would think I'd rather have the $283 out of pocket
Sure.
and then not pay for anything the rest of the year.
And that's where, like, if we see, Medicare, let's say Medicare is going to be $100 more a month than the group plan is, as an example. The difference in benefits, I think, justifies that cost difference that way, to where if you're just strictly looking at, well, I'm paying $400 a month for my group insurance. I don't want to, then Medicare is $500 a month. I'm not going to pay an extra $100 a month, when I could stay on this plan and I can continue it without any issue that way.
Right.
But then when we look at the benefit side, if you're in a high deductible or you have a high max out of pocket for the year, or whatever the case may be, almost certainly it's going to be a better situation if you have original Medicare paired with a Medicare supplement plan.
And a drug plan. So
Yeah.
actually, is there a different out of pocket for the drug plans?
There can be. So that IRMAA level, like we talked about with Part B, that is applicable for Part D drug plans as well. It's not nearly as severe. It may be like a $14 or $20 surcharge on top
because
of
it's a smaller premium.
premium. Premiums themselves can vary widely across the board. So there's some companies that have a zero premium plan where you don't have an additional premium cost for Part D drug plans.
Okay.
Other plans, if somebody's taking more expensive kind of specialty type medications, it can be, some plans are $120 a month. So
Now, what about their out of pocket? Like, let's say I have some expensive medications. What's the most I could pay on a drug plan with
great,
Medicare?
great question. So this year, if the drug is covered on the plan's formulary list, it
That's an
used
important point.
right.
Right
It,
there.
it used to be that you would have, people talked about the donut hole, that you
Yes.
would have your deductible phase, then you would have your initial coverage phase, then you would slip into the donut hole or the coverage gap where you would pay a much higher percentage of the medication, and then if you ever got out of the donut hole, you would go into what's called catastrophic, and the drug plan would pick up the majority of the cost, and your costs would go down greatly.
Okay.
That's all been eliminated, thank goodness,
Yeah.
because it's confusing for me, and me trying to explain it to a client is even more confusing.
You're confused.
Right.
We have more hope.
Right. So what they did, I think this was a couple years ago, they eliminated the donut hole, they eliminated catastrophic, and they went to a max out of pocket structure.
Perfect.
So we still have the deductible phase, and then we have the initial coverage phase where it's on a copay or co-insurance structure. And then if you and the plan pay a combined 21, or if you as the individual pay $2,100 out of pocket for the year for an expensive medication, and
Yeah.
if in the world of pharmaceuticals, all it takes is maybe one or two high cost drugs that are going to put you to that level. If you hit that $2,100 max out of pocket, then all of your medications are going to be a zero copay after that point. So
Okay. So we're kind of looking at I'm just trying to compare it to
Sure.
when people are coming off of my individual plans.
Yeah.
So 283 out of pocket on the Medicare plus would you say 2,000 and
$2,100 on the
$2,100.
prescription
So-
side if you're taking an expensive medication. If you just take low cost generics, you may have a zero copay for those or a $5 copay. They'd be very minimal. But in the situation, if you were to take some high cost medications, that would be a variable that would need to be discussed
Okay.
that way. So that is
Way to look at
it is.
your overall numbers for the year.
It is. And that, not to muddy the waters too much, because I know there's a lot of moving pieces with Medicare, but there are certain situations where in a group plan that's over 20 employees, where the health insurance is considered creditable, but the drug plan is not. So
right.
if the drug plan does not kind of meet or is equal to or better than what the terms of a Part D drug plan are, your health insurance could be creditable, but your drug plan may not be. And then you would need to kind of figure out what's the best option to go that direction. So
What might that look like where a plan wouldn't be credible?
so if they had a high deductible or a high max out of pocket for their prescription drug coverage, over and above what Medicare's kind of guidelines are, that way would be where a health plan would be considered creditable, but the prescription side, it usually is. I mean, it's
But
very,
that's your HR person.
yeah,
They'll know.
it's rare. I believe the benefits administrator, I believe they're supposed to send out a letter to their
annually.
group members that say your prescription drug plan is creditable with Medicare or it's not, and then you would kind of know that going
Another
into
thing to
that.
bring up to the team.
Right. So, because it's with a group plan over 20 employees, you're kind of, that the plan is creditable, but the prescription plan may or may not be. So that's one variable that you would want to address. And one question, add that to the list of questions, is how about my drug coverage, right? Is that creditable or not? So
you're saying if somebody does have an employer over 20 employees, well over 20 employees
Right.
comfortably, they can really choose their timing when to move to Medicare.
sure. Yeah.
But they should
Yeah.
investigate that
Yeah.
versus just saying I'm just going to stay on the group,
Right.
unless they have that younger spouse.
Sure. Yeah. And an example of that, Lisa, I think it's sometimes easier to follow an example. So I'll take a case of a husband and wife clients of mine that the husband is a business owner and he is 10 years older than his wife. When he was turning 65, she was 55. He decided to stay on he deferred Medicare. He didn't enroll in Medicare. He enrolled in Part A, but deferred Part B when he turned 65, stayed on the group insurance for 10 years. until his wife aged into Medicare at age 65. So he was 75 at that point. She was 65. And in that situation, she enrolled in Medicare under her initial enrollment period. So it was very simple. It's just, this is your window to sign up for Medicare, no issues. For his situation, we enrolled under a special enrollment period. So he came off of the group insurance. And completed a Part B application. In addition to that, and this would be true of anybody that defers Medicare, is there's a separate form that has to be submitted with your Part B application. It's called a CMS L564 form. It's an employer verification form that the individual plus their HR benefits administrator would fill out to show from age 65 to 75 in this situation that he had continuous creditable coverage.
10 years you have to prove?
Well, in this case, because he was 75, if you were age 67 and coming off the group insurance, you would show it for that 2-year window. So dating back to when you first turned 65, you would just have to show Social Security when you apply for Part B of Medicare that you've had continuous creditable coverage from 65 to whenever it is that you come off that group plan.
No gap.
No gaps.
Okay.
That's the key piece is that if there's a gap in there.
Employers. I mean, and then there's a little bit of lag. That could be a problem.
It can. Usually there's a little bit of a buffer. They have an 8-month period after one group plan ends that you can sign up for Medicare. But if you're going from one employer to another, and there's a gap in there, that can cause a significant issue. And it's definitely something to consider. And oftentimes people fill that gap with COBRA. And COBRA is not deemed creditable coverage with Medicare. So
I find that shocking because it is the group.
I know
plan.
it's an extension of the group coverage, right? But it's not.
It's the same exact coverage.
Yeah.
Wow.
So all those little things. I guess the main takeaway of this is there's a lot of questions. Yeah. There's a lot of questions to ask.
They sound complicated, but when you have somebody like yourself walking them through it, you tell them the situation and then they'll guide you.
Sure.
Right?
That's exactly right. Is if you're unsure whether you need to move to Medicare or you want to stay on your group plan, we can figure that out. Yeah. I mean, there's questions to ask. Sure.
Conversation.
Yeah. There's questions that we need to address to make sure that one, your plan is creditable. If you're in a group over 20, if you're in a group over 20, then we can have those follow-up questions of what does your group insurance look like? Let's compare that to Medicare and then make an informed decision to see what is going to be the best option going forward.
Okay. Wow.
Okay.
This has been really helpful.
Good. I hope so.
Something that I didn't know about. I don't,
Right.
My husband, I guess, is going to be approaching Medicare in a few years, but something nobody would know unless you were told.
Sure.
So
sure.
Okay.
Yeah.
Well, good. Thanks for spending time with us again today, Mike. I hope we helped everybody understand the timing for Medicare, all that's involved, and it's such an important decision. So if somebody has questions, how can they reach out to you?
They can either reach me on my website, phone number 480-229-3715. That's my cell phone. So you can text or call at that number. And I think you have my contact information. So
I do. You can reach out to me too.
Okay. Yeah.
Yeah. Subscribe for more, health insurance advice. Mike's going to be on here periodically and, guide us through the Medicare portion of the journey.
Wonderful.
I'm also on YouTube, Apple, Spotify, wherever you're listening from. Be sure to subscribe. And if you know somebody that would benefit from today's episode, please share with them. It's all free. We're putting this out there as a library for everybody to pull from. And if you have a question or a suggestion for another podcast, you can reach out to me at 602-852-5215 or Lisa at ecafinancial.com. Thanks, Mike.
Thanks for having me back. I appreciate it.